And saffron also sliding as well. Keep in mind, as we switch over the charts and take a look at some of the other sector players, some of these companies are clients, some are rivals, and you can see very mixed fortunes across the board for these names. Let's take a look at Unilever, and one that we very much need to take a big dive on, because this has been a space that many investors have been seeking over the course of 2019. Bond proxies, and the latest from Unilever, its update negative for the share price as it falls 4% today. It's warned the company may miss its underlying sales growth expectations this year, citing a slowdown in South Asia. The consumer goods giant expects growth to be below its previous forecast of sales in the lower half of its 3 to 5% range. It expects the trend to continue into 2020. The company says earnings, margin and cash will not be impacted. When we've looked at the growth in the sector, it's fairly slow growth anyway. When we're talking single digits, the low single digit range now, what the company is updating us on. I want to take you to autos. It's an interesting sector as we read in on some of the fortunes around car registrations in Europe, which rose 4.5% in November, the third straight month of growth this year, according to the ACEA. The figures were boosted by strong demand in Germany and France, which outweighed a decline in the UK. Automakers Vidal, Porsche and Audi saw a rebound in demand, while Peugeot and Opel Vauxhall experienced a drop. Year-to-date, new car registrations have fallen 0.3% compared to the same period a year ago. If you look at the reactions today, Renault, Fiat, Ferrari, all in the green, red ink splashing up elsewhere across the board. And some of this, don't forget, also related to the trade story. Meantime, to Roche in the pharma space, it says it expects to complete its $4.3 billion takeover of Spark Therapeutics today after it secured approval from the US regulator. The Swiss drug maker also announced that over 60% of Spark's outstanding common shares have been tendered in the offer. Roche announced the deal back in February as it looks to push into the treatment of rare diseases. Roche stock just sliding by about 1/3%. And we want to just take you back to the auto space for a moment as we drill down into an individual corporate story, and Fiat stock higher versus PSA. Peugeot Citroën down 1.3%. The boards of Fiat Chrysler and Peugeot maker PSA are set to meet separately later today to discuss a $50 billion merger. That is according to media reports. Both companies have said they are confident of signing an agreement by the end of the year. The deal would create the world's fourth biggest car maker. French government no longer seemingly in opposition to this deal. Jeff.
Yeah, thanks very much indeed. Let's introduce our audience to Helen Bradshaw, Portfolio Manager for Quilter Investors. Good morning, Helen. Welcome.
Good morning.
Bob Parker's still here as our guest host. He is Investment Committee Member at Quilvest Wealth Management. Effectively, anything with a quill this morning gets on the programme. Helen, let's just pick up on the news flow, shall we, around Unilever. It's a stock that people will probably have bought in part because they see stability in a consumer goods end of the market where they sell a lot of product that has repeat sales, plus it has a decent dividend at this point, and dividend is your focus primarily. Bit disappointing on some of the headlines this morning from Unilever, and it does raise that old question about how secure you can expect your dividend payout to be going forward, given the multiples the market's trading on and some of the growth figures we're beginning to see from key economies.
Yeah, absolutely. I think it's a really important topic, because actually what you are seeing is in many of these high-yielding stocks, actually question marks really starting to come through about whether they're going to achieve any growth going forward. And you've got the same issue that's reared its head with utilities, and you saw likes of Vodafone this year having to cut their dividend quite markedly. So for an income investor, certainly we have a number of stocks here in the UK with really attractive cash dividends being paid. But I think going forward, particularly as we see the rumblings of Brexit and the economy and the impact of global, what's happening with global growth, will these companies be able to grow? Will they be able to actually expand their multiples as well?
So as we come to year end, what advice are you giving to your clients about what expectations they should have for sustainability of these kind of dividend levels running into 2020?
Yeah, I think there's a couple of points. I think the first point to notice is actually, if you look at the headlines this year, stock markets have done extremely well. It's been one of the best years to be an investor on record. Contrast that to last year, where actually nearly every single asset class lost you money. So I think my first point would be about the return outlook for next year. I do think there are a number of positives that we can latch onto on the backdrop, work with the US-China Phase 1 trade deal, some of the geopolitical risks, the headline risk, receding somewhat. But I would stress that actually we're unlikely to see returns next year that we've seen this year. I think this year's been quite remarkable, and really questions continue about the outlook for global growth, and that will impact a lot of these companies paying these large dividends as well.
Helen, just sort of a couple of observations. If we look back at 2019 as we close the year, I think the first point is that we've had major divergence between sectors. So if we look at MSCI world indices, the tech sector up about 40% year to date, and the laggards have been the energy sector, utilities, and the materials sector. So that big divergence between sectors. In addition, it's been a year where cyclicals have outperformed defensive sectors, and obviously areas like utilities clearly very, very defensive. And also where value sectors have also underperformed, which fits in very with the high correlation with defensive sectors. And sort of what I'd just like to discuss is to what extent are expectations of corporate earnings in 2020 too optimistic? And will 2020 be a year of moderate growth? I don't think we're going back into recession. And I think in certain cases like Europe, the consensus is too pessimistic on growth. But what does worry me is that as the year progresses in 2020, investors are going to be disappointed by continuous downward revisions to corporate earnings. And what are your views?
Yeah, I think a really great point. And actually what we do need to see is actually some of this earnings growth coming through to justify these multiples. And in certain sectors like the technology sector, for example, they are very, very stretched. And if you look just here in the UK, you've seen such a huge divergence between the domestic names and the large internationally focused names as well. So I think, looking at the growth prospects for next year, we have been worrying about declining global growth, and recent developments over the last week, I think, has buoyed investors to some extent that actually there could be a slight rebound in some of this global growth. But it'd be really interesting to see how this develops. So even things like the Phase 1 deal with China, actually the devil will be in the detail, and to see how that actually is implemented and what is actually agreed. So I think there will be more of a focus on earnings, and that is a key risk, I think, for next year, and that there is a failure to see some of this come through. But it's important to remember too that at the same time we have the central banks really helping to support and drive markets forward. So the huge amount of easing that we have seen this year has really helped balance some of those.
Just to quantify that, if you look at the Fed balance sheet, it is now back over $4 trillion US dollars, and just back in September it was less than 3.8 trillion. So the Fed has pumped in over 200 billion, and the statement is that if there are any sort of tightness problems in the repo market at year end, the Fed's prepared to put an extra $500 billion into the market. Yes. So liquidity is very much there.
Does that extra money that central banks appear to be willing to provide help the market and or the economy? Because clearly it was about, as you quite rightly said, a repo market problem. Does any of that money ever come through into the broader economy?
Well, if you're Christine Lagarde, in her statement, she highlighted that European loan growth is growing by 3.5% per year, but that's in contrast. So she would say that the ECB QE program is translating into improved loan growth. Personally, I would challenge that. And the discussion we had earlier on about the weak valuations of European banks, I really question whether it's going into the real economy. Certainly it's going into asset valuations.
Helen, if the baton is going to be passed, and it's a very big if, from central banks to fiscal spending, what are the kind of companies our viewers should be looking at?
I think looking here in the UK, infrastructure assets actually would clearly be one to focus on. And Boris Johnson and the Conservatives have promised 100 billion in terms of infrastructure, particularly in some of the northern areas of the country that he won key seats from the Labour government from previous Labour constituents. Sure. So I think infrastructure assets would definitely be something to focus on. But I also think if we've got more fiscal in this country, actually, what does that mean for sterling? I think if we've had Boris already talking about increasing the minimum wage. He's already talked about lifting the cap on public service pay increases. And if you start to see some of these wage pressures, some of the wage growth coming through, actually what that could lead to is a slightly more hawkish Bank of England. And that will obviously have implications for sterling as well. And when you look at the stock market here in the UK, it seems to be the large FTSE 100 companies with international earnings actually do well when we have a weaker pound, and it's the more domestic names, the small and mid-cap names that benefit actually if we have an improved sterling. So I think we could see, and what we have seen actually in recent weeks is this big rotation within markets. So on a headline level, actually markets are reaching new highs, but if you look at the rotation underneath, it has been very extreme in some cases. So certain stocks, actually some utility names who had the threat of nationalisation over them ahead of the election last week have had double-digit returns just a number of days. So there has been a huge whipsaw in many cases. And so I think we're likely to see some of the leaders change next year. But I think the key question comes back to actually what's going to happen with Brexit. A lot needs to happen to get Brexit done. And I think actually this morning that focus has really sort of put a reality check for investors as to actually what's going to happen, particularly at the end of next year.
Helen, thank you very much for that. We'll park the conversation there for just a moment. We're going to squeeze in a quick break. Coming up, no stress. All 7 big UK banks get a clean bill of health in the Bank of England stress tests. But the stocks are selling off. Find out why.
The CNBC app has new features just for you.
Today, your information is more exposed than ever. When you shop, sign in, or browse, you could be vulnerable to cybercriminals. More online threats demand more protection. That's why new Norton 360 provides multiple layers of protection, combining device security, secure VPN, password manager, and cloud backup all in one solution. Get new Norton 360, starting at $24.99 for the first year.
How's work? If you're not loving your job and you're getting those Sunday blues, now's the time to make a change. With a LinkedIn app, it's now easier to find and land the job meant for you. There are millions of jobs on offer, and the LinkedIn app helps you hear about them first. Research shows applying within the first 10 minutes increases your chances of hearing back by up to 4 times. Stay in the know and grow your career. Download the free LinkedIn app today.
The S in Audi S-Line stands for many things like sporty, stylish, streamlined, and now seductively priced. Like the new Audi A4 S-Line, which you can now have from £359 per month, £2,154 initial rental. Test drive one at your local Audi centre, but you'll have to be swift. The offer ends soon. Search Audi S-Line. Audi, Vorsprung durch Technik. With 48-month contract hire, 10,000 miles per annum, 18s and over, subject to status, damage charges may apply, no ownership. Ordered by 31st of December 2019 from participating centres. Audi Financial Services, visit audi.co.uk.
Catch the latest news as it happens with MSNBC on TuneIn. From American politics to global events, when breaking news hits, you'll never miss a moment again. Search MSNBC on TuneIn to hear the latest.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
It's been a big year for banking transformations, and here we have another one right before Christmas. Swiss lender UBS plans to overhaul a business arm dedicated for the ultra-wealthy, according to reports. The shake-up would aim to boost revenue in the bank's global family office unit by migrating prized clients between departments. New co-head of wealth management Iqbal Khan would signal his first major marker with the move after his controversial departure from Credit Suisse. All 7 major UK lenders have passed the Bank of England stress test for the 3rd year in a row. The central bank ruled the banks could withstand deep recessions, both domestically and globally, including an economic shock worse than a disorderly Brexit and a global trade war combined. The BOE also said it will double the size of its required counter-cyclical buffer to 2% of risk-weighted assets. The stocks there you can see just a little bit weaker in the trading session, RBS in particular, and Lloyd's shedding 4.5%. Some of these were big beneficiaries on the back of the UK election, so a little bit of a reversal taking place in those names. Jeff, Steve.
Yeah, thanks very much indeed. Let's get back to the conversation around the desk. Helen Bradshaw is here with us, portfolio manager at Quilter Investments, and we're talking about income investing. Bob Parker is our guest host from Quilvest Wealth Management. We went into the break and then we started talking about real estate and the opportunity around real estate at this point. Just share with us some of your thoughts then as income investors, what we can expect.
Yeah, well, I think property, certainly in the UK, is the perennial hunting ground for income investors. And actually, pre the EU referendum, actually many investors in their portfolio had double-digit exposure to commercial property assets here in the UK. Since that, actually, sentiment has been very, very poor for the asset class, and that wasn't helped, I think, really by the wave of redemptions in the retail funds that we witnessed around the Brexit referendum, forcing many of them to suspend redemptions. And actually, more recently, you've had a similar scenario with another retail fund actually being in the same position. But I think, actually, again, it just really highlights for me the importance of looking under the bonnet and really working out and knowing what it is that you own, what you invest in, and what type of property assets do you have, because there's a real difference between sort of some areas of retail versus. Well,
that's the point, isn't it? I mean, people think, CRE, London skyline, but that's not where a lot of the interesting stuff's going on now. I mean, it is obviously always pretty ebullient compared with the rest of the country. But you mentioned retail. It's going to have a very tough decade ahead of it, at least, for all the reasons that we've discussed extensively around this channel as well. But if we are going to take Boris Johnson at his word, and other European leaders as well, we are set to have an infrastructure boom.
Yes.
CRE will play its part in that, won't it?
Yes, it will. And actually, if you look at, again, coming back to the price of sterling, actually many international investors have held off from investing in the UK because not just they were hoping for some clarity about the direction of Brexit, but actually for fear of a far left government here in the UK, which would actually have dire consequences for many of these infrastructure assets. Now, we've had that tail risk removed from markets, but I do think there's a lot of value to be had in some of these names. Clearly, kind of the retail area is going to struggle, and that will continue to struggle. But there are huge opportunities, and particularly for someone seeking sort of regular income streams. I think property does have a place to play within a portfolio.
We've been debating the home builders as well in the past couple of sessions after the UK election. Very strong moves to the upside despite the year-to-date levels they'd already been trading at. Today, along with some of the banks, you are seeing that reversal. So it's not just in sterling around some of the UK political risk with Brexit. You're seeing in some of these names a bit of a give back from that trade post-election. So how do you view this sector now, given the dynamics you're witnessing in the real estate sector here in the UK, risks around Brexit, and just how far these share prices have already travelled?
Yeah, I think it's only natural to see some profit taking, actually, given how far they have moved over recent days. And I think this point about people working out actually what is going to happen at the end of next year, and this morning with news actually looking like we won't extend that transition period, that could have real implications for the economy here in the UK. And I think people are just taking stock of that, and that will hit some of the more domestic names. But I do still think there are value to have in some of these names. If you look at their valuations, they are still trading on big discounts versus many of their international peers. And again, you've seen this year, actually, a number of foreign investors bidding for UK companies, recognising some of the value to be had, and particularly when we have a weak currency against this.
What's interesting is some really sophisticated trends in the UK property sector, like student accommodation, like
which, by the way,
grain population moving into retirement villages, and so on and so forth.
Your point at me when you mentioned the word student.
Exactly.
Listen, a lot of money has gone into student accommodation. A lot of money has gone into sort of retirement villages. You have to actually question whether that too much money is chasing too few assets, and also there are some, I think, also some governance issues around a number of those
serious
projects.
Governance issues where people are being ripped off, having their eyes ripped out on this stuff as well.
Particularly on Jeff's comment about retirement
the
villages.
resale for these poor pensioners and their families is a disaster.
Yes, so
anyway,
I think So conclusion on student accommodation, retirement villages is a word of caution. One has to be very careful about what you're investing in there.
Helen, I wanted to come back. There's one issue that has dominated the conversation around this desk all year, and we continue to focus on it, and it's the one that does potentially have some impact on income investors, and that's debt. And we've talked a lot about sovereign debt, but we should probably spend a moment on corporate debt. The amount of corporate sector leverage has spiked over 60% between, I think, 2009 and 2018. Those are the numbers that I've seen anyway. That has some implications for the ability of corporates to continue to pay reasonable dividend, or to continue buybacks, or a combination of the two. How much of an eye are you keeping on this, particularly as we're at a moment here where we're reviewing monetary policy within the major central banks, and we may have gone as low as we're going to go on interest rates?
Yeah, I think that's been a topic that has, come to the forefront a number of times this year. It had a lot of airtime in January as there were concerns about global growth, but I think it's not going away anytime soon. Corporates are very leveraged, and I think it comes back to the point of what we expect to happen for growth next year, and whether these companies can deliver on their earnings. So there is question marks, and you're seeing many investors shy away from some of the more highly leveraged companies. But at the same time, you do have monetary policy is still very supportive. So it's hard to see how rates are going to go up anytime soon. And if that is the case, then that should help keep some of these highly indebted companies ticking over, just kicking the can down the road, if you like.
Excellent. Helen, thank you very much indeed for joining us. Very nice to see you. Have a good Christmas.
Thank you.
Although Helen is working over Christmas, aren't you? Not Christmas Day, of course. What a shame. I'm not. Helen Bradshaw, Portfolio Manager at Quilter Investors. Coming up on the show, China's BATS. There's only BAT, really, I suppose, isn't there? There's no S in the acronym. But anyway, BATS knock it out of the park in 2019. We reveal the biggest winner when we come back.
CNBC Make It. Can giving up coffee...
How's work? If you're not loving your job and you're getting those Sunday blues, now's the time to make a change. With a LinkedIn app, it's now easier to find and land the job meant for you. There are millions of jobs on offer, and the LinkedIn app helps you hear about them first. Research shows applying within the first 10 minutes increases your chances of hearing back by up to 4 times. Stay in the know and grow your career. Download the free LinkedIn app today.
I used to be a bit of a rubbish sleeper. I'd toss and turn all night, and somehow I could never find the comfy bit of the mattress. It was a proper nightmare. That's what brought me here, testing mattresses in the Which Test Lab. We use a custom-made barrel rolling machine to simulate a decade's worth of use. And the mattresses that perform best are the only ones we recommend for your bedroom.
Which tests harder so you can buy smarter. Visit which.co.uk.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Right now, instead of hearing this, you could be listening to the music that keeps you moving with TuneIn Premium. Find today's biggest songs and all of your favorites commercial-free. Visit tunein.com/premium to upgrade.
Back to throw, fires right on the slant. Caught, touchdown.
He leaps and he surges in, touchdown.
This Saturday at 7:30 p.m. Eastern Time, the lights shine bright on the Las Vegas Bowl. Washington Huskies head coach Chris Peterson will coach his final game before retiring as he takes on his former school, the Boise State Broncos.
Down to the 5, he leaps for the end zone, and he is in.
To listen to this and every bowl game, just search college football today.
Hockey fans, the 2019-20 NHL season is here.
And tucks it home!
And with this team, it's really fun to be a part of a team like that.
And you can hear the action live on TuneIn Premium. From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
Returns to Europe despite fresh record highs on Wall Street as the UK Prime Minister Boris Johnson eyes a fixed Brexit deadline and the trade deal rally takes a breather. Unilever shares slide after the company warns 2019 sales growth will undershoot forecasts as the firm lowers expectations of a quick recovery in the coming year. UK banks sell off despite getting a clean bill of health in the BOE's stress test as the central bank changes the rules on how much capital the lenders must hold in their coffers. And Boeing suppliers fall as the plane maker halts production of its 737 MAX jet in the wake of 2 fatal crashes after US regulators dash hopes of the plane returning to the skies before 2020.
Here in Europe have been trading for half an hour so far. We're also closely watching other areas of the market, namely sterling. We've just cracked the 132 handle. We started out our morning on air on Squawkbox Europe talking about a 132.70 handle. So we have swiftly unwound all around some perceived political risk that Boris Johnson may use his majority to reinstate a hard deadline to leave the European Union. So a little bit more Brexit risk back into pound. What you've seen by comparison, FTSE still trading stronger, but on the continent we've got a little bit of a reversal, and some of this no doubt a bit of fatigue around phase 1 trade deal with any real details. A very strong rally has transpired on global stock markets as news that a deal has pretty much been done. It keeps on crossing the wires without any further execution details, and you can see the Stoxx Europe 600 as a result just exhibiting some tightness, fading by 0.6% at the start of this session. Let's dive into those sectors. There was a fairly broad-based sweep into the red at the start of the trading day. That remains the case with just 2 patches of green at this point. Oil and gas surpassing utilities now to take the top spot, and utilities still in the green, but elsewhere you've got red right across the boards, and a decent amount of it too. If you look at some of these percentage drops at the bottom end of the charts, more than 1% off real estate, basic resources, banks, travel, leisure, retail, and right at the bottom, household goods. You don't typically see this extended reversal in the so-called bond proxy, a safe place to park your money in 2019. But a warning from Unilever that its sales numbers would be below the lower end of the 3 to 5% range, which questions the point about why keep a 5% handle at all when you're not even hitting 3%. That has spooked some in this sector, and you can see household goods trading down by 1.9%. Let me take you to what you're seeing elsewhere by stocks as a result. Unilever right at the bottom. The reversal continues as the stock falls now 6.25%, and that's the listing in the Netherlands, but also in the UK 5.2%, roughly down 5.3%, I should say. Elsewhere, a little Selling in M&S and some other UK names as a result of this slight unwind that you're seeing around big beneficiaries on the back of the UK election. Home builders are in the mix of stocks that are trading a little bit weaker at this point. Top end, you've got Rheinmetall in Germany up 2.5%. Want to take it to sterling. Take a quick look at this boards and you can see how we are now playing out, and that swift reversal that we have witnessed from the 132.72 handle this morning. We've dropped to 131.74, 73 roughly, so 1.1% south. And there may be a view on the set about how far south we go on sterling from this level. Fairly swift retreat from the handle. 135 on the exit polls that we saw initially.
Are we missing something here? It all seems very aggressive and very binary, the reaction of the market to the information we think we're going to get from the Queen's speech and from later on the week. Is there less binary, either we will get a deal or we won't get a deal by the end of this year? And I can't, or say next year, and I can't help thinking there will be something else.
Well, I think if you look at the themes are that actually the UK economy, I think growth expectations will be revised upwards, and I think there's a high probability we see 1.5% growth. Growth, I think, is going to be better than the most pessimistic of expectations.
But this is about Brexit, Bob.
Yeah.
This isn't about the UK.
Well, I think we are going to see all year this backwards and forwards on is the trade deal going to work or not before the end of 2020. Now, my view is that it's probably not going to work. And I do think the default option is we'll have an extension to the transition.
But we take our lead from the US. Hang on, just one quick, and I'll have a full answer after that. We take our lead from the US on so many things in Europe about and anyone looking at the Trans-Pacific debate at the moment or have spotted that you can have a trade deal but not the full trade deal, i.e. this is phase one. Why can't Europe and the UK have a phase one trade deal?
That's my central case, is that we have a partial trade deal, and I don't think we're going to have WTO tariffs between the UK and the EU. But don't forget, any trade deal essentially has a whole series of different components. First component is, do we have tariffs on trade, i.e. goods? Secondly, how do we treat services? And services so far has been neglected, which is why the financial services sector is still very worried about passporting rights in Europe. And at the moment, it looks as though we're not going to get those passporting rights. That's another phase. The key question is regulation. And this is where actually the EU is actually very concerned that the UK is going to become regulation light. And there is this sort of big debate in Europe as to whether the UK will have a regulatory advantage on the regulation of the import and export of goods and services. So you have a whole series of quite complex, long-term negotiations to take place. The central case is that Boris Johnson can say, right, we're going to have a fixed end of 2020 deal, but that will probably be changed slightly, so it's a phase one deal, just like America's got a phase one deal with China. Then in 2022, 2024, we might end up having phase 2, 3, and 4.
I wanted to hear a view based on that scenario about whether we've got mispricing of risk around sterling, because clearly the market is unraveling its positions, thinking that we're right back to where we were around the UK election, that there are concerns around some form of a hard exit with this reversal that's taking place.
Yes.
Is that the right trade based on your assumptions that a phase one is possible?
I think a phase one is possible, and I do think it will happen, but that's by the end of 2020, and in the interim, for the whole of 2020, we're going to have this backwards and forwards about will a trade deal happen or not, and I think the overall issue is that investors will have uncertainty about the eventual outcome, and that uncertainty will be reflected in sterling trading fairly heavily. Now, what do I mean by that? It probably means that we see the current retracement going back to perhaps 127, 128, the upside capped at 135, and that we could see this backwards and forwards between sort of the mid-120s and the mid-130s for most of 2020.
So what also stands out to me with the Brexit uncertainty we've had, it's left the Bank of England trapped on the sidelines.
Yes.
So if this certainty persists, What does that mean for the forecast for 2020 for the Bank of England? Because I think the market has been saying, well, maybe we get a hike, maybe there's going to be some move off the sidelines, or if there's a weakening, we get a cut. But if we've got stasis around Brexit again, does that mean we get any move from the central bank in 2020?
I don't think we get interest rates being cut. I think we might get one rate increase, and the basis of that is somewhat stronger growth at 1.5%, somewhat higher inflation, and don't forget that wages growth is building up, unemployment is low, capacity is being reduced in the system. But the key factor is that the theme in the UK in 2020 will be an easier fiscal policy. That easier fiscal policy means you won't ease monetary policy at the same time, and it means a moderate bias towards a tighter monetary policy.
Can I just... Oh, sorry.
Oh, Karen?
No, please.
How underweight our portfolios when it comes to UK stocks?
Well,
we've had 3 years of international investors lightening their positions on fear over uncertainty.
Yes. The answer is investors were extremely underweight sterling and UK stocks 2 to 3 months ago. What has happened in the last week or two is that underweight position has been partly corrected, but if you look at the surveys, probably as we go into January, it'll probably show investors still underweight, which is why, yes, I think sterling's going to have a correction back to 127, 128. Yes, I think the FTSE 100 is looking quite stretched at this level. We could likewise have a mini correction on profit taking, but is it going to be a trend reversal in the markets? No.
We will have a in-depth look at technology, about the big bat companies, Baidu, Alibaba and Tencent, with Arjun will join us after a short break. We will discuss all of this, but just to say European bourses are under a bit of pressure, and as Karen pointed out, the pound bearing the brunt of concern over a Brexit deal.
Now get greedy whenever you want. Subscribe to the American Greed.
How's work? If you're not loving your job and you're getting those Sunday blues, now's the time to make a change. With a LinkedIn app, it's now easier to find and land the job meant for you. There are millions of jobs on offer, and the LinkedIn app helps you hear about them first. Research shows applying within the first 10 minutes increases your chances of hearing back by up to 4 times. Stay in the know and grow your career. Download the free LinkedIn app today.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Want to step up your sparkle? Get to B&Q. Our Christmas clearance is now on. We've huge savings on lights, artificial trees, decorations, and more. So grab a bargain and get your grotto glittering. Bring the magic ho-ho home with B&Q. Selected Christmas lines only, subject to availability. See DIY.com.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
It was 1970, and a pregnant Air Force captain found herself in a bind.
If you're pregnant, you cannot be active duty. If you have a child, you cannot be active duty.
So she sued. This week on The Media examines the case that almost set the course for women's reproductive rights. Instead, to Justice Ginsburg's dismay, we got Roe v. Wade. On this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
China's tech sector has seen another landmark year while facing challenges from a slowing economy and trade war uncertainty. E-commerce giant Alibaba stood out as it held one of the year's largest IPOs with its listing on the Hong Kong exchange. It's like the prodigal son coming home. But we are sending him back in a few weeks' time. But Arjun, anyway, you're going to tell us all about the key Chinese players.
That's right, Steve. I bring tidings from China about the bats, Baidu, Alibaba, Tencent. And let's kick off with Baidu. It's been a bit sort of a rough year for Baidu. Shares down 22%, and that's mainly because it's faced increased competition in that core search business there in China from the likes of ByteDance and also Tencent as well. So it's seeing a competition in an area that it once dominated in. And what you're also seeing as well is a weak advertising market in China. Advertising a huge part of Baidu's revenues, and the company facing a slower market there, as well as macro uncertainties as well. But it's looking for new avenues of growth, investing very heavily in mobile, trying to boost its mobile app to keep eyeballs within its products. It's also seeing some success with its video streaming platform, iQIYI, which is sort of like Netflix over in China as well. And they're seeing user and revenue growth in that division as well. When looking forward, it's trying to put its bets on big areas like driverless cars as well. And there's expectations going into next year are relatively low still for Baidu as it looks to see a recovery, especially as those shares have been under pressure this year. Let's move on to the next company, perhaps the most successful of the trio, Alibaba. Now, it's seen a success in that core commerce business, online shopping, with its online marketplaces, continues to push into some of these smaller cities and continues to see Chinese consumers flock online despite concerns about the slowdown in the Chinese economy, despite concerns also about a slowdown in the Chinese consumer. But it's not just about commerce for Alibaba. Cloud computing is a very fast-growing division for Alibaba. Grew 64% year-on-year in terms of revenues in September quarter, and that's seen as a very key area for the company as well. And so when we also look at the company, there's a bit of concern about how much this company was spending on new areas like food delivery. It's managed to keep that spending under control, which has helped the stock rise this year and make investors feel comfortable going into 2020. The final company of this trio now, Tencent, the gaming giant over in China. Now, it has had a bit of an up and down year. In 2018, the Chinese government actually froze game approvals over in China. It actually restarted those at the end of 2018, and that's helped to see a recovery in Tencent's core gaming division. And there's a lot of optimism about the pipeline of games going into 2020, which should help continue to boost that. It's also looking at new areas like fintech and cloud computing as well, which has seen a lot of success. But there is still, while there's still a lot of optimism around this company in 2020, still a lot of concern about the regulatory environment, particularly with games, as the Chinese government continues to be concerned about gaming addiction in China. So that's an overview of the bats in 2019, and which should be an interesting year for those three companies going into 2020. For now, guys, back to you at the desk.
Jen, thank you very much for that. Let's move on. Yext is a US enterprise software company that helps brands manage data to deliver verified answers. It's specifically working to fight against fake news and says it's not just in the media, because business information is a big problem too. To talk about tech and the tech sector, specifically in the States, we're joined by Howard Lerman, who is founder and CEO of Yext. Howard, nice to see you, and thank you very much for joining us. I want to start off talking about search first up, because when we were talking to Arjun previously on the show, we're pointing out that the market dominance of search engines, 70% for the likes of Tencent, and then you've got Baidu rather, and versus 88% for Google. Huge market dominance. But you think the future of search is going to change? Just tell us how that evolution is going to happen and what that does to the market dominance.
Well, search already has changed. Search has changed from document-based keyword search to direct answers. 20 years ago, when you would search on Google, you'd type in a keyword, you'd get 10 blue links back on a page with documents that contain the keyword you search for. But increasingly, when you ask Google or Baidu a question, they understand your query, the intent of your query, using natural language processing and give you a specific direct answer back. So for example, if you were to ask how many calories are in a Big Mac, 20 years ago, Google would have sent you to a page that might have had that keyword that is on the document.
So but today, search for yourself on that page.
That's right, you'd have to read it. Today, Google just says 530.
So where is the future of search going then? Because you get the sense when you turn up to some of the big technology events that the visual has to change. It's got to get a lot more interesting. You've got speakers coming into the mix, the likes of Alexa and every other version of a speakerphone out there, so it changes the nature a little bit of search. But where do you think it's going, and does that disrupt Google at all? Because every time I have a conversation around search, all roads seem to link back to Google.
Well, around the world, you have Baidu in China, you have WeChat in China. Conversational user interfaces and conversational artificial intelligence is without a doubt the future of search. At Yext, what we've set out to do is put the truth online. When you look around the internet, you have fake news and social media, you have a lot of imposters in search. Anyone practically with an internet connection can write an article and get SEO'd. The ultimate source of authority on a business is the business itself. McDonald's are the people who set the number of calories in a Big Mac. So we need to make sure that to keep the truth online and to keep trust in the internet, that answers, that's the future of search, come from the business itself.
Sorry, I was just going to say, but the problem is not necessarily, in that case, that's a very clear example of a corporate that has to deliver accurate information. A lot of the problem around this has been that old adage, crap in, crap out. If you, was it Peter? Yeah, I think we just did. Just now. But the point is it Peter Drucker who talked about if you can't manage what you can't measure? And I think it all refers to the same idea that the origin of the information has to be clean and the data source has to be clean. And then, of course, you can use a lot of your search functions to bring that information up. If the origination is faulty, or there are people that have a vested interest in putting facts out there that are not accurate, how does the search engine fare in those environments?
Well, sadly, there are people that put facts out there that are not real. It could be competitors, it could be those with nefarious intentions, those who want to, say, interfere with elections. There's a lot of precedent for this happening. But fundamentally, there are two kinds of information. There's subjective information, which is, hey, what's the best hamburger out there? What's the best hamburger in London? What's the best grocery store within a mile of my home? And then there's objective facts, which are numerical, which ought to come from the business itself. And that's where the business ought to be the authority.
How do you make money out of this? I know it's a really basic, obvious question, but you're a $1.6 billion market cap company. Just tell us a little bit about how you guys are going to grow and make money out of this.
Yext is a search experience cloud company. We help companies deliver brand verified answers everywhere consumers search. So if you were to look up a fact about one of our customers in Baidu...
Do you fact-check your customers, or is it just your customers' view of the world that you're putting out there?
That's exactly right. It's the second. We believe that those that have...
You may not be giving less fake news. You're just giving the right to reply to the company, or putting that company's worldview at the top of the searches.
We're putting the facts about a company in search and on their own website.
So in a way, you're like a data auditor. So if I'm a company, I come to you and I say, right, I want somebody to audit that what I put in the public domain actually is correct.
It's a funny thing. What you were asking originally, the future of search, all starts with a knowledge graph. The future of search is natural language processing. Old search was keyword-based document matching. New search is, hey, let's understand your question and give you a specific answer back.
Sorry, I'm going to be really cautious on this one. Is not the future of search whoever pays the most to be at the top of the future of search?
That is paid ads. We have nothing to do with paid ads. We help companies put their facts...
the most from a cloud software company like yourself to put their facts rather than their ads as they see it near the top of the search?
Well, there's a bunch of different experiences people can search on. We actually just launched a revolutionary new product called Yext Answers. It gives every company their own Google-like experience on their own site search. You ever run a site search on a website and you see the little magnifying glass and you get a crappy result? You said it. What we do is make it possible for a company to answer a question and give an answer back just like Google can. So think of a Google-like experience on a company's own website. Think of the right facts in Google and in WeChat and on a company's own website. I'm
still struggling with the premise that companies always tell the truth about their products.
They are the authority about their products. But remember, reviews are a different thing. So reviews, that happens on sites like Yelp, that happens on Google. We don't touch reviews. What we touch is, hey, the phone number of Tesco. Let's look right here in the United Kingdom. You have Specsavers. They're a customer of Yext. Tesco. Every time you look up a Tesco in Google Maps or Apple Maps or Siri, or you ask Alexa, hey, what's the phone number of the nearest Tesco? That fact came from Yext. And they absolutely have an incentive to put the right address, to put the right phone number, to put the right pin on the map so that you can get there when you're looking for it. Reviews, that's user-generated content. We don't touch that.
Howard, just briefly before we let you go here, you've started up a number of tech businesses, and obviously this is the one you're coming to talk to us about today. Just share with us your insight. 2020, what's it going to be the big tech year of?
Well, I think artificial intelligence, without a question, is starting to reach the point where it touches all parts of your life. Whether you're using Google search or Baidu search, or Arjun was talking about Baba, or you're using Spotify, where it's automatically selecting the songs that you're going to listen to based off of your previous preferences. AI is here. It touches all parts of your life every day, especially in search.
It's been a pleasure having you in. Thanks very much for joining us this morning. Howard Lerman, founder and CEO of Yext. Quick look at the home builders here in the UK. If we can just pop up the chart and just show you how we're doing. As Karen was pointing out earlier, we've got a little bit of give back here for the home building sector. This in spite of the fact that the broader FTSE 100 has actually turned positive, or has been flirting with positive territory since the open. The pound sterling, again, we talked about a little bit of give back here. Bob's going to give me £1 when we get to 145 in 12 months' time.
Yes.
We'll see. We'll see. I can take it out of the tenner that Karen's going to give me for our DAX conversation.
So you're arbitraging between the two of us.
Absolutely. Bob, just as we wrap up here, then, some final thoughts, if you might, on year-end Christmas rally. What do you do?
There's a big discussion at the moment about whether we're getting an equity melt up, and that's obviously driven by the US-China Phase 1 trade deal. It's driven by the Johnson election victory. More importantly, I think it's driven by the Fed injecting liquidity into US financial markets, and also, sort of the persistence of the status quo at the ECB. So monetary policy is certainly supportive. Between now and the end of 2019, I think we may end up with a little bit of profit taking, but just because we've come a long way over the last 2 to 3 months. And whereas we had quite difficult equity markets in August and early September, since September, we've had this persistent strong rally. I suspect we are going to see some profit taking on assets such as sterling, such as global equity markets, which have rallied. Now, having said that, I think we are going to see early in next year rotation into underperforming defensive sectors which pay dividends where you're confident of those dividends.
Bob, it's a pleasure. Thanks very much for coming in. Good to see you, and best for the season.
Thank you.
And we'll see you in 2020. Bob Parker, Investment Committee Member, Quilvest Wealth Management. That is Squawk Box. We'll see you tomorrow. Thanks for tuning in. Stay with the channel. Street Signs up next.
Anytime, any place. What?
Ho, ho, ho. Who's made a list this year?
I want a new phone, one with amazing cameras, ultra-wide lens, of course, live focus video. Well, it has to be 5G ready to stream all my films. Can it come with something awesome to listen to them through?
Darling, I think he was talking to the kids.
Get everything you want and more. Purchase a Samsung 5G ready device and claim a pair of silver wireless Galaxy Buds at no extra cost. Shop our 5G handsets in store or online at your local O2 store or o2.co.uk. 18 plus. Offer excludes Galaxy Fold 5G. Purchased by the 25th of the 12th 19. Claim from Samsung within 30 days. T's and C's apply.
You never know where life will take you, which is why the new BMW 3 Series Touring is perfect if you're all packed up for, or escaping to. It has extensive storage and an automatic tailgate, handy if your hands are full. And it even has an optional intelligent voice assistant to help you at every turn. The new BMW 3 Series Touring. Book your 24-hour test drive today. Test drive subject to status and availability. Participating retailers only.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Far wing, elevates, triple bucket.
The roar of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the man bleeds for 3.
TuneIn Premium brings you every minute of the NBA season streaming live. so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Fake in the lane, turnaround jumper from 8 feet is good on the
Search
right.
NBA Today to start listening.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
What was your favorite binge-worthy podcast of 2019? Here's one of ours.
Not so long ago, Stanford dropout turned CEO Elizabeth Holmes was a rising star in Silicon Valley.
On The Dropout, ABC News reporter Rebecca Jarvis tells the unbelievable true story of Elizabeth Holmes, who went from being the world's youngest self-made female billionaire to facing 20 years in prison.
Her company Theranos was poised to change healthcare forever.
She would have been the next Steve Jobs.
Search The Dropout on TuneIn to hear what the hype is all about.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Hey, NFL fan, can't watch the game? Can't be there? No biggie. With your TuneIn Premium membership, you already have an all-access pass to every team and every game in the league. Amazing, right?
Steps up, floats it towards, at the goal line, it's intercepted!
Listen live as the action unfolds or on demand when you can. Anytime, anywhere, all season long.
Right side, it is caught, it is in for the right side for the touchdown to Keenan.
Search NFL today.
Good morning and welcome to Street Signs. I'm Joanna Bersetchi.
And I'm Juliana Tattlebaum. These are your headlines.
Boeing suppliers fall as the plane maker halts production of its 737 MAX jets in the wake of 2 fatal crashes after U.S. regulators dash hopes of the plane returning to skies before 2020.
Red returns to Europe despite fresh record highs on Wall Street as the trade rally takes a breather, while Unilever drops to the bottom of the Stock 600 after warning on sales growth.
Sterling on the slide amid reports British Prime Minister Boris Johnson wants to outlaw an extension of the EU transition period, raising the prospect of a harder Brexit.
UK banks sell off despite getting a clean bill of health in the BOE's stress tests as the central bank changes the rules on how much capital the lenders must hold in their coffers. Well, a very warm welcome to Street Signs. Let's get to one of the top corporate stories over the last 24 hours or so. It's a stock that's been in focus over the last several months, and that is Boeing. Boeing is freezing production of the 737 MAX in the company's biggest shutdown for more than 2 decades. It comes after the U.S. Federal Aviation Administration refused to clear the planes for flight before 2020. Now, Boeing says the temporary suspension will start in January, but some 12,000 employees will keep their jobs as the plane maker focuses on delivering stored aircraft. Let's take a look at Airbus shares. Obviously, one of the key competitors, the key competitor to Boeing, shares this morning up about 0.15% on the back of this news. Perhaps more importantly, let's take a look at the suppliers, key European suppliers of Boeing. We've got Senior shares at 6.6% lower, Safran down about 4%. So the bulk of the impact being seen in these suppliers here. Big reaction in regards to that news from Boeing. Let's take a look at the European sector players and see what the picture looks like for these. Meggitt down just a touch, Melrose down as well, Rolls-Royce taking the biggest hit